All right, so I'm gonna go over the 2022 model, which I took today. It wasn't the cleanest trade, but it was a 2022 model. So going into today, I wanted London high and or Asia high to get swept to then target lower prices. For example, this all these stacked lows, which will just be a low resistance liquidity run, and below this was 4 hour equal lows. So that was basically my bias going to today was take out London high, then reverse and take out equal lows and these stacked lows. So basically what the 2022 model is a sweep of liquidity, which we have here at London high, and a market structure shift and a pullback to a fair value gap. So we're going to be breaking down my trade. So the reason you see my cursor moving a lot here is because I was annotating this and explaining it like live time, but then I felt like I was just talking too much, so I just muted myself and just time lapsed this whole thing because I feel like I was just yapping. So here I've annotated where I wanted the high of the 2022 model to be formed, which was during 9:45 to 10:15. And the reason I wanted it to be formed around this specific time window is because that's when the 9:50 to 10:10 macro occurs. And that's also when the opening range ends from 9:30 to 10. That's the opening range. And I was also anticipating this move up right here to be an ICT Judas swing, which is basically a manipulation swing. And that Judas swing forms from 9:30 to 10, which is also the opening range, and which is also inside the 9:50 to 10:10 macro period. So that's why I wanted to hide the 2022 model to form in this specific time window, just because for me it becomes a little bit more high probability, and it's forming above the midnight opening price, as you can see right here. So right here, I'm just waiting. So from right here, this will now be my market structure shift low. So if price comes down to displace below this low, then that will become my market structure shift. And you can see here we have a little internal buy side purge right here. And there is Asia highs up here, which is this blue line right here is Asia high. But since we do have this 15-minute SMT, I know that price does not have to sweep Asia high just because of this SMT. So I was completely okay with taking a setup around here, even if Asia high does not get swept, because we do have this SMT. And we have a higher time frame SMT, which this right here is the 15-minute time frame. Right here, the top right is the 15-minute time frame. And on here, the 1-minute time frame, we have a 1-minute SMT also. So this is what you would call an SMT confirmation, where we have a higher time frame SMT, and within this SMT high, there's also a lower time frame SMT occurring within that high. So this 1-minute SMT kind of just validates this higher time frame SMT. And from here, the reason why I annotated this as an internal stop rate is because if we go back just a little bit, So you can see how this was a market structure shift, but I switched it to internal stop rate, because if you notice how this candle here sweeps out this candle low and it doesn't really displace below this low, right? So this candle kind of just sweeps the liquidity resting below this low, as you can see with this wick. So for me, this is not a real market structure shift, because if it was a real market structure shift, then it would have displaced below this low, but it just wicked it. So that just convinced me that it was an internal stop rate. But I was still anticipating lower prices. I just wasn't confident in this being my market structure shift because there's no real displacement. But if you were confident in this being a market structure shift, then you could have taken this fair value gap as your 2022 model, because again, a 2022 model is just a higher time frame sweep of liquidity right here with London high, market structure shift, which would be right here, and a pullback to a fair value gap, which is right here, right? But I just didn't have confidence in this just because I saw it as low probability. So I just let this play out a little bit more. And then once we actually start closing below this low, I changed it back to market structure shift, because now that since we're closing below this low, that just tells me that we're gonna expand lower. And this right here, this is very important. This is very important. This candle right here is that 10 o'clock candle. And that is the opening price of the new 1 hour, 4 hour, and 15-minute candle, right? So at 10 o'clock, a new 4 hour candle opens, a new 1 hour candle opens, a new 15-minute candle opens, a new 5-minute candle opens, a new 1-minute candle opens, right? So 10 o'clock is a really, really crucial time you should be looking at. So from here, I was playing the 1 hour power of 3, the 1 hour open, high, low, close. So at 10 o'clock, I was anticipating price to open here, right? It's going to open, form a high as our manipulation. Look at the open, high, and then the low, and then the close, right? So I was annotating how I only wanted to trade the distribution right here. If I can stop it just at that right moment. Right here, right? I highlighted this because I said that I only want to trade this distribution move, right? I don't want to trade this manipulation, and I don't want to trade the close, right? I just want this portion of the move right here, and I'm happy with it, right? So I want the next 1 hour candle to open high, just my manipulation, and low, and then close, right? So open, high, low, close. And essentially that is just accumulation, manipulation right here at the high, and distribution, right? Because I want to catch that distribution move, right? So keep that in mind. So we open here and we form a high, right? Look how precise this is. I annotated the high touching over midnight opening price. What does price do here? It trades above midnight opening price, just how I outlined right here. And that's where I wanted the high of the 1 hour candle to open up, right? That's my manipulation now. Price manipulated above midnight opening price. And then once we trade, or I'll wait for the price to play out, but right here, once this candle closes below these two up close candles, that's my order block, right? Because price has already created the open and the high, right? Price already created the high of the 1 hour candle. Now I'm just taking an entry to trade the distribution move, right? So this order block is going to be my entry of the distribution move. And you're like, well, how is this the 2022 model, right? Well, this is the 2022 model, right? We have a London high, liquidity sweep, a market structure shift, and a pullback to fair value gap right here, right? But I didn't take this entry, right? Because I wasn't confident in it. So I'm taking the second entry right here. This is still the 2022 model, but I'm just taking a more confident entry, or an entry that I'm more confident in besides taking this entry here. So this is still a 2022 model, but I'm just taking a continuation trade with more confluences and more conviction. Right, so we tap into this order block. I enter in 3 micros, and I'm anticipating this to be the distribution move, because everything that I've needed has already happened, right? And you can see the high. So I was annotating here. Let me go back. What these lines mean. All right, so I want the high where I want the high of the 2022 model to form, right? So the high of the 2022 model forms within this time window, right? This time window is when the high forms of the 2022 model. And when we start displacing away from it, create a market structure shift to the downside, right? So within this time window now, from here to here, should just be a distribution move now. So from this 950 to 1010 macro, or 1015 macro, as I have annotated here, 1015, I just want the rest of this move, or the rest of this time window, to sell off to my take profits, right? And I'm taking my profit here because this low here and this low here are relative equal lows. So I want this time window here, from this line to this line, to just sell off completely. And this time window here, this small section here, is where the high formed. And it sounds kind of confusing, but just bear with me. But this is how you align time with price, essentially. And here I have the 930 opening price drawn out here. And what I was showcasing here was how I didn't like how price reacted when trading below this 930 opening price. See how we the bodies close above 930 opening price. So I was just saying how if price was bearish, then I would have wanted to see this 930 opening price get displaced through. But you see how we're kind of respecting this level as support, which I didn't really like. So I was just a little bit more cautious about it. And this, I was anticipating this order block to get inversed, because once this order block gets inversed, then we should just see lower prices, because this order block is the last line of defense to see higher prices. You can see we bounce off this order block once right here and twice right here. So I wanted this candle here to break at least below this inverse order block, or this anticipated inverse order block. I wanted to close just below here, at least a body closure. But if it didn't close below, then I would have partialed out one contract. And I wanted to see speed below this low, just to confirm that this order block is gonna hold. You can see price comes just shy of my take profit, but you see how it leaves equal lows again. It doesn't take out this low. That's just generating more sell side liquidity. But there are a few mistakes that I could have avoided, or a few improvements that I could have done a little bit better on. Like this, I only took out one partial, but I should have taken out two partials and just let one run. And here I was anticipating that this could be a future unicorn model. How if we break above this high right here, that'll validate this as a breaker block to send price higher and take out this high right here, because again we're in the negative 2.5 deviations level, right? This could be a nice rejection level. We're also breaking back above the previous cycle low. So if this breaker was to form, if we did get a candle closure above this high and we retested it here, then there is a chance that we could see higher prices. So right when this candle forms, I should have taken out another partial, but it is what it is. So from here, I trailed my stop to this consequent encroachment of this propulsion block here. And what a propulsion block is, you see how we have this order block here, and we've retested that order block with another order block. So these three consecutive up close candles is an order block, and it retested a previous order block, making it a propulsion block. And once you have a propulsion block, you do not want to see price come back and reach the consequent encroachment of that propulsion block. That's why I trailed my stop there. And I do have like a video on propulsion blocks, but if you want it, then I could just send you the link. And right there, I get stopped out. So that was basically the 2022 model, but it was kind of sloppy, but I personally liked it just because of this the open high low close of the hourly candle, because we did catch this slight distribution move here, but it missed my runner, my other positions. What I could have done better was just partial a little more aggressively. That was basically it.